All right, so trading window. Now, your phone, your MT4, your MT5, the screen where you take your trade, that's actually the trading window. All right. Now, on the trading window, there's a lot you need to understand what each of them stands for. So on your trading window, we have the balance, we have equity, we have margin, we have free margin, we have margin level percentage, okay? Then you also have stop loss, take profits, all right, and all of that. So now let's look at each of them. The first one is balance. Now, balance, this is the amount of money you actually have when you have no open position, all right? When you have not entered a trade. So let's assume you funded your account with $100. You have not entered a trade. You have not done buy. You have not done sell. That is your balance, okay? Now, the number changes based on wins and loss. So now, when you now open a trade and you're either buying or selling, your balance will still remain your balance until that trade closes. So now this is how it works. So let's assume you have $100 and you took a trade. The trade is running in profit. Your balance will still remain $100. Then your equity will be the one to increase. So maybe let's assume you have your profit is now like $5. Your equity will be 105. But your balance still remain. Now, your balance will increase when the trade has closed in profit. In the same vein, if the trade closed in a loss, your balance will reduce. So that's number two. Equity is the current, is the amount you have. All right. Equity is the amount that you have during running trade. So let's assume it's plus and minus, plus or minus your floating amount. Now, what do we call floating amount? Floating profit and loss. It is called floating profit and loss. When you are in a trade, your trade has not closed. It's still running. Whether it's in profit or loss, that is what it's called floating profit and loss. Okay? Floating profit and loss. So let's go. Say equity. This is the number. This number contains one's balance, amount, plus profit or loss. If, for instance, one has up to $22, it will be indicated, simply put, equity equals to balance plus floating plus profit / loss. Then let's look at margin. Margin, so this represents the available money you have in your account. Free margin, so this represents the available money you have in your account to trade with and open new positions. Note, when there is no open position, equity, free margin, balance are equal. Now, when you open your trading window, if trade is not running, both your equity, your free margin, and your balance, everything will be the same thing. But when trade is running, your balance will be static, free margin will be moving, all right? It will be dynamic, it will be moving, you know, based on the fact that the price is not stable, it's not constant, it's just moving anyhow, either up and down. But your balance will be static, okay? So, stop at level. There's actually what is called stop at level. Now, stop at level is, say stop at level, once the margin fell below 100%, your broker may begin to start closing your biggest position first. Now, you are going into the market with leverage. So the money is not your money. As soon as you go below 100%, your money has finished. So what will happen is that the broker will begin to, if you have multiple positions, the system will start closing the biggest one, the one that has the biggest loss. Okay, be closing gradually until it closes all of them. Or the trade may close remaining one that may come back into profit and bring back the account if you have plenty of such. So when your margin percentage go below 100%, then the account is now in trouble. So let's look at the next one, margin. Margin is the down payment needed to get you into a trade. This is non-leverage money. Now, the down payment, now, before you go into a trade, the broker will set aside a money, a particular money, which is called margin. That one is removed from your balance, is kept there so that whether you win or lose, the broker does not lose. All right? The broker will not lose. So whether you win or lose, the broker will still take his own. But if you now win the trade, you may not really understand that that kind of money has been removed, but there is something set aside for you to have entered the trade. Okay, so we have limits and stop order. Okay, now limit and stop order. Now, basically, for you to enter a trade, there are different ways you enter a trade. You can enter a trade instantly, which we call buy by market. So you want to buy Euro USD. You don't want to wait for a particular price. You want to buy now at the price that is selling. All right. We call it instant order, instant execution. So you click buy or sell. That is instant execution. Sometimes it is also called buy by market. So you are buying by the current market price. Okay? Buy by market, you are buying by the current market price. So that is instant execution. Then apart from the instant execution, we have what we call pending orders. Okay? Pending orders are orders that you set, all right, waiting for a conditions to be met before the trade is executed. Now you set a pending order either for a buy or for a sell, but you want something to happen before the trade is executed. And not until that thing happens, the trade will not be executed. It will remain a pending order. So we have for pending orders, we have limits and stop orders. So we have the buy limit, sell limit, buy stop, sell stop. So these are what you are seeing as buy limit, limit and stop orders. So Forex Foundation 2, okay, we're actually going, the basic we are doing now, we are doing it into intermediate and in and out, but all of these are things you need at the basic level, okay? So differences between limit orders and stop orders, meaning of stop order, limit orders, pending orders, all of them are pending orders, okay? So now let's look at them. Stop orders. Stop orders are threshold that has to be crossed only before one enters a trade. They are like a race. Once one crosses a threshold and enters into a new race, e.g., buy stop and sell stop, they are stop orders. Okay? Don't worry, I will explain them very well. Then limit order. These are threshold that has to be crossed before one enters a trade with expectation that price will turn around. They are likely, they are like boomerang. Price has to go one way before it goes the other, up before down or down before up. Examples are sell limit and buy limit. Okay, so they are all pending orders. So pending orders, we have the sell limit. This means placing price above the entry price. Price climb up before it turns around and fall. Then we have buy limits. Buy limit is placing order below the price. Okay. Price must go lower before it turns around to rise. Then we have buy stop. This means placing order above the market price and price keeps going up. Sell stop. This means order placed below the market price and price keeps going up. So now let me show us something. Let me show us something. So sell limits. Sell, can we listen, please? Now, sell limit is, let's use Naira for instance. Naira is presently 1,740. All right? And you want to sell. You don't want to sell at, that's, you have dollar to sell now. You don't want to sell at 1,740. Now you now come to the market and you place your order at 1,800. What you are trying to tell the market is that you are anticipating that the price will go to 1,800 no matter what. So what happened is that when the price gets to 1,800, that is when your own market will trigger. That is called sell limit. So sell limit is setting your price above the current market price, above it. That's sell limit, setting your price above the current market price. Now, looking at the chart, you have analyzed your trade. You know that the place that the price of the asset is now is not really where you believe that the price will turn. You are seeing a stumbling block in front, and you believe that when it gets to that level, that is when the market will turn. So you now go ahead and set your sell limit up there. So that is sell limit. So when you set your sell limit, as soon as the market gets to that place and it hits that price, okay, your trade has been activated. Now that your trade has been activated does not mean that it must sell. And that is why you have take profit and stop loss. As you are setting your sell limit, you're also setting stop loss. That if it happens that your prediction that says that if the price gets to this place, it will start coming down. And if it happens that it fails to come down, what will happen is that, okay, let the trade hit your stop loss and take you out of the market. If not, you can expose your account and the trade continue to go up. Before you know, the small money you have is gone. So I don't know if it is understood. I try to break it down as easy as possible for you to get. Okay? So that's number one. Number two is buy. It's understood, right?
Understood that this is the place where we blow account a lot.
Come again?
I said it's understood, Sha, and this is also the kind of place where many people blow accounts.
Of course. Okay. So number two would be buy limits. Buy limit is the same thing I've explained, but this is the opposite direction. Price is selling, but you said you don't want to buy at that level. You want to buy at a discount. You still want the price to go down. You still want the price to go down. So you now go down and set your price below. Now, there is a condition you have seen, and you see that where you want to set your price, definitely when the market comes there, there is a lot of demand and a lot of people is going to be putting their own there. So the buy will start from there. So you set below the current market price. Now, let's look at buy stop and sell stop. Now, buy stop and sell stop is different from sell limit and buy limit. Now, buy stop is the price is already selling, but there's what you are trying to wait for before you enter the market. You don't want to enter the market at that price. So you want to wait in front, okay, before you enter the market. So you now go up and put it buy stop, because there is something you are seeing between where you have put your buy stop and where the price is. You are seeing some stumbling block. You say, no, if this guy is not going to cross here, but if he cross here, which means the buy will continue. You now went ahead and put it there. So whenever price gets to that your level, it will trigger you in and price will continue to buy. But if price fails to continue to buy after it triggers you in, there's also your stop loss that can easily take you out. Then if you do not have stop loss, God bless you. So let me do another one now. Let's use, you are going from, I think we have Port Harcourt people here. You are going from Element Junction to my one. And there is a car that you want to enter in Element Junction. So instead of entering the car in Element Junction, you said, no, you don't trust what is happening in Rumukushi Junction. You want to cross Rumukushi and go to the front, maybe go to Chairgate and wait for the car that you want to enter to come. So what you are saying in a nutshell is that if that car you are waiting for, if it's unable to cross Rumukushi and get to Chairgate, front of Share ROA, you will not enter. That is simple analogy of buy limit. You don't want to enter that car where it is because you believe that it will have problem to cross Rumukushi. But anytime the vehicle is able to cross Rumukushi, the rest movement to my one is as simple as ABC. So you want to wait for it to cross before you enter. That is buy stop. Then the opposite is what? Sell stop. The opposite is sell stop. Okay, so I don't know if there's any question before we go to the phone so that I show you the trading window and everything we have just talked about now. Any question so far? So in the absence of any question, I'm going to stop share here. Then we'll go to the mobile to show you what we have just discussed. So let me share my screen from my mobile. Okay, I believe you can see my screen, right? Can you see my screen?
Yes, sir, we can see your screen.
Okay. Okay, so let's look at this screen now. Let's look at this screen. Okay, so now we talked about balance. Now this is the balance. You can see the balance. Now the balance is static. Right now, the balance is static. The balance is 29,043.92. All right. The balance is not moving, but the equity is moving. All right. Now, the margin is not also moving. Why? Because the margin is the money you set aside that to have taken this trade. All right. That's the money that has been set aside to have taken the trade. So the margin will not move. Now, can you look at the equity? Now, equity is a combination of your floating loss and your floating profit and loss and your balance. So if you are in a loss, your equity will be lower than your balance. But if your trade is in profit, your equity will be greater than your balance. Okay, so if you look at this trade now, you see that the equity is greater than the balance right now. Okay, so now let's look at the free margin. Free margin is 28,927. Now this is the free margin. Now this free margin is the amount you have to enter new trades. So as this account is now, I can enter more trades, all right? Because I still have enough here to enter a new trade. Okay? Now, margin level percentage. Now, your margin level percentage is what keeps you in the market. Now, when you are in a trade and you have this much margin level percentage, so which means you are very safe. All right? You are very safe. Nothing is going to happen to your account at this level. Okay? Now you can imagine the amount of trade that is running and the equity. So the margin level percentage is high. But this same margin level percentage, if it goes below 100, the account is in trouble. The account is in a big trouble. So you don't want to get that. You want to always make sure that your margin level percentage is in good health. Okay? So now this positions is the running trade. All right, this position is the running trade. Now, if you were having a pending order, the pending order will be listed here. So now let's not go to pending order. Let's do something on pending orders like the buy limit and the sell limit so that you know exactly how to do it and how it works. So let me. Oh, did I stop share? I stopped share in error. Okay, that was in error. I wanted to share stop animation. I went to stop share. Okay, so now for you to take your pending order, you look at this plus sign, right? This plus sign here that I just marked now, this plus sign. So you click on the plus sign. Now this is GBP JPY. Is the trade that is running currently. Now, let me see what is currently happening with the chart. So let me go to the chart. Okay, so let's assume right now we want to do a sell limit, a buy limit. So this is where the price is currently now. I want to come here now and put buy limits. So I will take the price. The price I want to put as price limit is 196,633. So I will come here now, click on this. Now, can you see what is here? This is market execution. Market execution. So market execution is when you want to buy instantly, like I have explained all of this before. So what it means is that all you need to do is just to click buy. All right. You either click buy or sell. Okay. Instantly. You either click buy or sell instantly. But that's not why we are here. We want to do a pending order. Okay. So now you click on this drop down. If you look at under this market execution to the end, there's a drop down. So I just click on the drop down. So can you see the buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit? Leave the last two. It does not concern you. We have never used them. I've never used them. I don't even know what it means. But all I know is that buy limit, sell limit, buy stop, sell stop. So we are doing buy limit. So you keep it there. What was the price? I think it was 193.633, right? I think that was what I saw.
No, no.
Huh? It's more than that. I think so. It was 193. Let me go back.
We are not.
Okay. This account will not permit that. You know why? It will not permit a sell limit, a buy limit. Why? Because there's a running trade. This is a prop firm account. Don't mind them. This is a prop firm account. So this prop firm does not take what is called hedging. So if I'm doing a buy limit, it's like I'm placing a trade in the opposite direction. It's more like hedging. So let's choose a different asset. So let's look for okay, so this is Euro USD. Okay. So right now Euro USD has been selling. Okay. So but now we want to do a sell limit. We want it to buy to this level, then pick our sell. So let's do 1.05419. So sell limit. So you choose this is where you choose the asset you want. Okay. When you click on it, it will open the other asset and you choose the one you are looking for. So I've just clicked on it now. Euro USD. It has brought Euro USD now. Now, this is your lot size. You don't want to, this is what you always check before you take a trade, depending on your account size. Okay, now presently, this account is using a mini lot size. Okay, so this is 0.1. All right, it's using a mini lot size because it's a big account. It's not a small account, it's using a mini lot size. Okay, so I want to make sure that you take note of that. Is what you always check before you take a trade. So now we are doing sell limits. And our price was 1.05419. Then you place. Okay, so you can see that the order has been placed here now. This is the order. It's an order, it's a pending order. It will remain there as order until it triggers. Now, when will it trigger? It will only trigger when the price reaches that level. Right now, the price is below it. But if the price gets to this point, what will it do? It will trigger and start selling. But also note that you are not the owner of the market. So you may have set and believe that when price gets there, the trade will come, turn around and start selling again. But it can happen that as soon as you trigger your trade, the trade will continue to buy. So that's when you need to take profit and stop loss. So when you're doing your analysis, make sure that there is take profit and stop loss. Like for this one, I did not put take profit and stop loss, but if I want to put take profit and stop loss, it's as simple. I can actually easily put it. Okay. So let's go to the charts. Now, this is actually the trade. This is the trade here. So I can now put this is a higher technology right now. By the time you start trading, you learn this one. But ordinarily, you are supposed to just use modify, but advanced system has made it that all of this becomes shortcut for us to use. So I use them a lot. Okay, so this is the XL. No, I'm still moving the limits. Okay, so this is XL. I'm putting take profit here. Okay, then I click modify. So can you see that ordinarily, let's assume you were having the figure. The same time you put in your parameter for entry, you can as well put in your parameter for the exits, okay? Now, there's what we call entry and exit. The price at which you enter the market is the entry. Exit is both your take profit and your stop loss. They are exits. That's what takes you out of the market. They are exits. So it's either you are exiting the market in profit or you are exiting in a loss, okay? So these are the parameters now. You have entered them. All you need to do is now you come here and click modify. You can see modify at the bottom, right? The very bottom. Click modify. Done. It has been modified. So your trade is here modified. Okay? So this is how to place sell limits. And it's the same thing vice versa for buy limits. Okay, I'm not going to be doing that because I've explained this. So you are doing the opposite for buy limits. All right. For buy limits now, you are placing the price below the current market price. What we did now was to place the price above the current market price. I have many other videos. One of them is already uploaded even before this one. So by the time you watch all of them, take time, you will have a better understanding. All right, so let's go to do stop limits. Okay, so now let me use another asset. Let me use another asset. AUDJPY. Okay, now before we continue, let me go back to Euro USD. So can you see that Euro USD have 5 decimal points? Can you see it? This is the price. It has 5 decimal places, right? That is, every currency has 5 decimal places, except the JPYs. What are JPYs? Any trade that is, any asset that is carrying JPY as a quote currency. Okay? So let me bring out any of the Ys now. So see, this is USD JPY. This is USD JPY. Can you see the decimal point is in 3 places? It's in 3 places. And you can tell with what we just did about lot size, right? Lot size and pips calculation. So this should be your guide, okay? Now let me bring another JPY pair. CHF JPY. You can see it's the same thing, right? 3 decimal places. So let me bring gold. Gold is XAU USD. I'm seeing something that want to make me buy gold. I'm buying this gold.
Wow.
Okay, so I have just placed an order. Now this is what? This is called market execution. All right. This is market execution. So I just placed order now to buy this trade. This is gold. Okay. There's something I have seen that made me say, no, I want to buy this. And I did. Okay. So let's continue. Let's go to another asset so that we can set our pending order. So let's do AUDJPY. Let's do AUDJPY. So the price of AUDJPY right now is at, the AUDJPY is actually consolidating. I'm not seeing a clear direction. It's not giving me a clear direction. So, okay, but it has been selling. I don't know what I want to call it. But see, this is where what we are doing now is buy stop, all right, and sell stop. So this trade is actually in 100,865. This is the present price. Okay. But I want to look at something so that let me delete this order before it will go and activate this Euro USD. This is a live account. I don't want to hear that they should bet the mama fly. Okay. Because if it activates now, it's not a good order for me. Let's take it out first. All right. So AUDJPY. So we're going to be doing a sell stop. Hello? Hello? Go ahead. You were saying something. Okay, so we're going to be doing a buy stop.
I said you really caught this good.
Okay. Okay, so we'll be doing a buy stop. So now this is where the market is right now. This is where the market is right now. But we want the market to come across this level before we buy. So we're going to be taking our order at this point. So here, let's say we'll be buying at 101,725. 101,725. So we'll go back here, AUDJPY. AUDJPY. See the gold now, in the dance up and down, but in go where it's supposed to go. AUDJPY. So you use this $sign to look for it. AUDJPY. So we've picked it and we are doing buy stop. And we say our price is, what's the price again? Oh, I think 100 what? 105 something. 56 something. $100. Okay, let's say 102 something. Why is it not highlighting? Buy stop. Okay. The price has gone up. Okay, because we are supposed to. Okay, so let's do 100,965. 965. Okay, 962. Wow. Because the price must be above the current price. So let's look at it here. So see, this is where our buy stop is. See where our buy stop is now. This is where our buy stop is. This is where the price is now. So what this means is that once price gets here, it will trigger and it will start to buy. Okay? You can see it here now. It's here as order. It's here as order. Okay? So it's the same way the reverse is for sell stop. I think we have my short people here. So when we say reverse, you know what that means. So when you are doing the opposite side, that's what you should do. All right. Thank you very much. Let me stop share at this point. Open to questions. But I'm going to be ending the recording so that it will not be too lengthy for those who will be watching it later while we'll conclude with our questions and answer. Thank you very much. God bless you.